All right, I see people logging in, just letting everybody know we'll be starting here in a few seconds. I wanted to open up. We've got quite a few registrations here, so I wanted to get open up early so that we can let people. I didn't open up too early. We got 2 seconds till the top of the hour.
Man, you're like 10 seconds on the quick on the draw, Randy. Oh, man, is this how today's gonna go? Wow,
This is it. Hey, we're sticking to this schedule here.
you're punctual.
Punctual, and I found out today that you are
Punctual?
punctual as well. I think we got that right.
Yep.
And so this is yeah, that's a thing with me. I always like to get it going early. I'm going to really kick it off with some housekeeping. We are the top of the hour, so if you haven't logged in yet, you don't hear me, but if you haven't, you should be logged in case you're out there. We got quite a few, like I said, logging in. So I want to welcome everybody to today's presentation, which is Cryptocurrency 101. You can see our presenters there, Anthony and Matthew. I'll be handing it over to them in a minute. Before I do that, a couple housekeeping items. This is available for CPA, and I didn't ask everybody, but if you can, anybody put in the chat that you can hear me and that you can see us. I assume you can, but I just want to make sure no technical issues. All right, got it. Perfect. Thank you. All right, so quick housekeeping. This is available for CPE. You need to meet the requirements. You've heard this before, but we'll say it again. Stay logged in for 50 minutes, 50 minutes. It's 1 hour of CPE. And in addition, answer 3 of the 4 polling questions that'll pop up during the presentation. If you do that, you will be eligible for your continuing education, your CPE. Those certificates, along with the presentation, will be sent to the email address you registered with. And I always forget to ask Mark what the timing is on that. If Mark wants to chime in, he can, but I would think it'd be sometime next week at the latest.
That's correct. Yes.
All right, look at that. All right, I think I hit all the housekeeping items. One thing I want to point out is I know some of you were on the presentation we did yesterday. Yeah, that was the 174 capitalization rules. That is
wow, that was riveting.
It was it was riveting. Oh, believe me, everybody's coming out of the woodwork. They want to hear about this now because they realize that they live under these rules. I just want to let everybody know that is out on YouTube now. So if you didn't get to see it, you can go to the Trimerit YouTube channel and take a look at that. That's out there as well. And then I know we have registrations on here from both Trimerit's website and from CPA Academy. I just want everybody to know that those certificates will be being sent out from Trimerit, not CPA Academy, even though if you registered from there. All right, that being said, enough of my time. I'm going to now hand it over to Matthew and Anthony, and they're going to educate us on cryptocurrency.
Yep. This all started a while back when we did a unique CPA podcast with Randy and live. We did a podcast live. So we started talking about cryptocurrency and he was like, I still don't like it. I still don't get it. Nobody has explained it to me in any kind of rational way. So my name's Matthew, and I'm one of the founders of Acuity, and Anthony is my colleague that runs our cryptocurrency practice. And we have accepted the challenge today of attempting to bring you inches closer to understanding cryptocurrency. And we're going to do that by, you saw the thing, we're going to talk about some current events. We're going to talk about some fads in 2022. We're going to talk about stable coins and how you're going to have to think about that with your clients and your businesses. We're going to do a tool overview. We're going to do a regulatory overview. I think we're going to swap that order. I think regulatory comes before the tool overview. But we're really excited to be here today. Thanks to Trimerit and Randy for inviting us. Andy, I'm like all over the place on jumping thing. Anthony, do you want to introduce yourself? It's like I haven't met you before. I'm like messing up names and stuff like that. I did this the other day on my podcast, but that's all right.
Hey everybody, my name's Anthony. Like Matthew said, I'm the crypto practice lead here at Acuity. I'm excited to be here and show you guys what we got going on and what's going on in the cryptocurrency space.
So as you all know, we got polling questions. So the way I like to do polling questions, like to get some information. So the first 2 will be getting some information, and the next 2 will be a little bit about paying attention. So Randy, I think you're the one launching these. If this would help us a lot to understand what's your level of exposure to cryptocurrency. And I'm a CPA, so I understand the importance. So I will try to wave you down and flag you if you're multitasking. So you make sure to get these polling questions in and we get your 50 minutes in so we get your CPE. Nothing else we're getting your CPE, folks. We're about, come on, guys. We got almost everybody. We're
You're
doing
going to
good.
be well educated and get your CPE. Believe me, you and I have gone through this twice. We did it on the live podcast, and we did it on just a podcast you and I recorded, and I was much more well informed after those two, and I believe everybody will be today. We're 92% participated. We were 92. We dropped to 91. Somebody reduced an answer. We got more people jumping in, I think is what happened. And we've been up for about a minute now, so we're going to close this here in just a few minutes.
Hurry, get your CPE.
Get your CPE. Listen to Matthew.
Awesome. And then we'll get kicked off. It looks like everybody's on the earlier side of their cryptocurrency journey, but we have some regulatory updates, tax and bookkeeping updates on the AI CPA rules coming out later that will get you, I think everybody will be appreciative of. So awesome.
Great. And so I'm going to close this, Matthew. One thing I want to say is I didn't say this at the beginning, but if you do have questions, put it in the Q&A tab. I'm going to try to monitor the Q&A tab. And if I see some things that Matthew and Anthony can answer, I will bring that up to them sometime during the presentation.
Great. Appreciate it. We're going to start a little bit with current events, and we're going to talk about what was in the news last year. We're starting here because for those of you that are practitioners, you need to know some of this stuff when your clients ask. For those of you in the real world, these are the things that you might want to know what the impact was. But the big news this year was not very good. This is the third time Anthony and I have presented to a group of CPAs and accountants, and each time we've had to add a name to this list. These are the bankruptcies going on. We have FTX, Voyager, BlockFi, Genesis just got added to this list. So the one that you've probably seen in the news is FTX, and that was one of the exchanges. So we're going to talk a little bit about that in a second and how you should be thinking about exchanges. But the gist is people were treating all of these that were exchanges like banks. And when you do that, you lose in cryptocurrency. Exchanges can hold your cryptocurrency and your client's cryptocurrency, but that's not how they've been regulated. I would argue that that's not how you should advise people to use exchanges. You shouldn't advise them to use them like banks. And it seems like we keep repeating this problem. This is not a new problem. In 2014, we had one of the biggest exchanges hacked, and that was the failure. This wasn't this is a counterparty risk issue. If you're looking at kind of the different risks to think about. But the more and more we talk about cryptocurrency, if we don't learn from this history, we're condemned to repeat it. So in 2014, we had a huge exchange failure in Mt. Gox. Luckily, a lot of that has been recovered. That was a theft. FTX was more of a fraud, people are saying. So all of it relates to counterparty risk. So that was the big ones in the news. FTX was the one that there's going to be probably miniseries about, and it's going to be the Fire Festival of whatever 2025 when it comes out probably, and you hear about it, or the Theranos or whatever you want to compare it to. But there was more that happened that's really interesting that people need to think about and understand when they're thinking about cryptocurrency risk. Luna and Terra, this was an attempt to have, instead of a asset-backed, what they call a stable coin, they had an algorithmically backed stable coin. But this project that was out there in cryptocurrency at the first half of the year was the big news, because it lost people's faith and it ended up cratering. It started and the stable coin that it had lost its value. So everybody thought, oh, this is always going to be worth $1. And then it lost its value because it really wasn't backed by any kind of physical assets. It was backed by a computer algorithm. So when we're talking to our clients about this, and when we're thinking about this, it's easiest, I think, to think about if this was not a cryptocurrency, what are the same risks you would think about? And counterparty risk is a huge part of that. It's just like who's holding the bonds or who's holding the assets that you're talking about, like, are they FDIC insured? If you think about the banking institution, like if your clients were to put something in a non-FDIC insured bank, you tell them, hey, just be aware of that. Well, exchanges are like non-FDIC insured banks, and people don't seem to realize that. And it's something we've kind of done a really disservice for. So these are some of the phrases and some of the language that can use for people that are more familiar with cryptocurrency to communicate with them. I like using the word exchange to reinforce this with people. So when our clients are asking us about exchanges, I like to remind them that exchanges are for exchanging. So that means get in, exchange, and get your cryptocurrency out. The purists in cryptocurrency use this phrase, not your keys, not your coins. So cryptocurrency is based on like a permissionless or trustless environment. When you put your cryptocurrency on your exchange, the exchange owns the cryptocurrency and not you. And what happened with FTX, you can see what happens if the person that you give your keys to or give access to decides to use it for something else. You have no control over that. It's like giving your cash to a bank, except there's not the regulations that the exchanges that our banking institutions have.
Matthew, it's sort of like if you went to those gold and silver exchange places and had them keep your gold and silver there instead of exchanging it for cash.
Right. And that they weren't insured. You would want to know who that company was that was holding that. Could you trust them? Things like that. So that's been a real challenge in cryptocurrency. Transparency has been a huge challenge, but it's really getting much more and more important as it gets more mainstream for us to understand what we can do to research and know what we're buying or what our clients are buying to be able to help them along. Randy, I got a second polling question that's going to help us kind of tailor some of the content as we go down the road. So if you're multitasking, jump back in, switch screens, and fill out our polling question. And this is about whether you're really more interested in like accounting or the tax side of this, so we can really tailor the content on the regulatory update and focus the time on the regulatory update section later, and when we do the tool analysis on your guys' preferences. We're prepared to talk about both. We'll probably looks like we're going to talk about tax a little bit more maybe right now. So
yeah, we're currently, you see the polls too, right? But accounting 15%, tax 34, both 47, and neither. I'm not sure why you're here.
Oh, they're getting CPE. Let's be real, Randy. We've all been in this boat. It is January and they're getting their CPE so they don't have to do the 40-hour push in December. So kudos to you. There's 25
Matthew,
we should
change the neither to neither I'm here to get CPE.
Neither I'm here to get CPE, and I'm just tolerating Matthew for as long as possible until Anthony can talk. That'd be great.
CPE awesome. And investing, I see. All right, I'm going to close this poll. We got 96% participating, which is good. Poll is ending. 47% of you want to hear both. 15 at accounting, 34 at tax. Back to you.
Awesome. Cool. So when we talk about, like, people ask us all the time, like, what other accountants, what research do you mean, Matthew? Like, help us understand what we can do to help prepare our clients, what we can do if we're running a treasury function at a large company, what we can do to really understand what research is there out there. And so Anthony and I were talking, and we thought that it would be best to give you some examples using what's out there about the 3 most popular stable coins right now. So there's been lots of controversy primarily around Tether, and we'll talk about that a little when we see this report that we have in store for you that they're issuing. But the question is, when one of our clients buys these, or when we buy these in our companies and our treasuries, what are we buying? What is it backed by? Like, you know, the US dollar in fiat or real life money is backed by the full faith and government of the US government, which depending on what happens with the debt ceiling every time we vote, who knows what that's going to be like. But USDT, Tether, USDC, and Binance USD coin are the 3 most popular coins out there, and they're each doing something to increase transparency about what is backing their issuance. Why I'm bringing this up and why we're starting with these is Tether USDC coin. You can see them here, and Binance USD are 3 of the top 7 cryptos. You can see these are not being bought to speculate. Their value is at $1 and fluctuates between like hundreds of pennies. So it's 99.996, 99, or 1.0001. Like you'll see the fluctuation on those. These are not cryptocurrencies that fluctuate in value. So people are not speculating with these cryptocurrencies. So this is another reason we thought we'd bring it up for those of you in the business world. These are likely the first one that real businesses are going to be using for cross-border payments. We're seeing a lot of people, in particular, USDC is the favorite of our client base. And we're seeing people use those as opposed to doing foreign wires for contractors in other countries if they're US based. So they're all pegged to the US dollar, these 3. And one thing I'll note, I've included this volume column on the right. And this is the one from yesterday. This is just off a website called CoinMarketCap. And the 24-hour volume when we ran this yesterday was $50 billion of daily volume was happening amongst these 3 cryptos. That is almost double of Ethereum and Bitcoin combined, which is those are probably the 2 you've heard of if you're not very familiar with cryptocurrency. So the daily volume, the people using it, the daily volume is double in stable coins now than it is for those other coins, which makes sense. You know, Bitcoin is more of a store of value. Ethereum is a protocol that has a bunch of other uses, including all of the tokens it supports. It's thousands of cryptocurrencies now. But so for accountants, though, it's easiest, I feel like, to start here. And it's easiest to say what these are supported by, right? Because we're starting to get transparency. We'll start with what I call the controversial one. Tether has had the most in the news of all the stable coins, and that's because they resisted doing any kind of reporting. They were unable to get an audit, and they initially said they were going to hold just US dollars. But when they finally got BDO to come in and do an agreed upon procedures engagement, you can see this is what they were holding. Of the 68 billion, this is the 68 billion, only 40 billion was in T-bills. They had a bunch of commercial paper. They were playing in money market funds, cash and bank deposits, repurchase agreements. They had non-US treasuries. They had corporate bonds. So you get below the line, corporate bonds, other investments, secured loans. Like this is billions of dollars, right? That they have that isn't really making this a stable coin theoretically. If there was a run on Tether, you would say this is like, when you see the other ones, you'll say this is likely, or at least the next one, this is likely riskier for your clients to be using Tether, right? Because you can kind of see what this is. The other thing, if you're an accountant, you can really geek out and go to the agreed upon procedures. You notice this one's only being done quarterly. It's not a review. It's not an audit. It's just agreed upon procedures. So if anybody's, I'm a recovering auditor, 9 years recovered. But when I did agreed upon procedures, it was like I was doing these very specific things. So when you're doing your research, or if you're going to advise people, or your clients are starting to dip into it, you can educate yourself by reading these reserve reports and also the agreed upon procedures. Let's contrast what you just saw with USDC. Grant Thornton's doing this one, but you can see they have like the CUSIP IDs for the treasury for everything. Like they don't have any other investments, I don't believe, on this one, right? No other investments, nothing, right? Maturity dates showing the liquidity and how much when it matures. We pulled this in October, so there's some November maturities in there. But you can see how liquid Circle is, depending on whether you agree on whether the grant office is doing enough agreed upon procedures, always contingent on that. But this is, I think, why most of our clients are gravitating towards USDC versus Tether, because it is truly seems to be back. If you want a cryptocurrency that is corresponds to the dollar value. It is truly backed by, as close as I've seen to one, by US dollar. That's assuming that Grant's doing their actual diligence on this one. Binance USD. Now, Binance is not a US company, so there's issues with that. Some people have concerns about that. They're also issuing monthly assertions, but you can see it was harder to read. It was very narrative based. Withum's issuing the report. It's $20 billion. So you really got to go in to each of these 3 stable coins and really look at it. And then you're like, oh, this makes a whole lot more sense. You can understand the risk profile of each one, and then you're able to give your customers, if you're in the customer service industry, or your clients advice, and if you're in treasury function internally, you're able to really have a way to talk to your investment committee about what the risk is behind these stable coins, right? So this is trying, like, our goal today is to demystify some of this stuff and give you some tactical ways to like get more information into your hands and the hands of your clients, for those of you that client serving, to be able to answer these questions. So having said all that, the question that you guys are answering is what's most interesting to you: USDT, USDC, Binance, USD, or none of the above. I love that we have so many skeptics, but you're going to be educated skeptics.
And I think we need to make an official announcement. This poll's up. We got a little bit slower participation than normal on the
wake up,
poll answering. Let's go.
Multitaskers. So I was droning on. Does that mean like I lost 100 people?
Yeah, I think no, we are still at the max. Anthony, was there any questions you wanted to respond to that came in the chat right now?
Yeah, well, Matthew drinks his water and can't talk while he's drinking his water. I'll answer some of these questions that popped up in here. So I'll kind of just rapid fire go through and answer as best I can. So Amina asked, what do you tell if they're a casual trader or a miner? So typically a casual trader is somebody who's just going in and buying, trying to game the system, right? They're trying to buy low and sell high. That's kind of where you'd see sort of a casual trader. Whereas a miner has an actual mining operation where they have a computer that is set up in, probably an undisclosed location to you. It's how they usually explain it. Could be in their backyard, could be, on their desktop computer. That's actually mining Bitcoin, that's solving those algorithms, that's connecting that block on the blockchain. So that would be the difference there. We've got Charles, who asked, as a CPA, why is cryptocurrency important? And he asked as a CPA that doesn't know anything about the subject. So it's important because it's different and new, and it's got a really complex way of having to account for it compared to just regular, fiat or regular currency transactions as we see. So that's why it's a little bit different. And it's new. Anytime things are new and different, you want to kind of jump ahead. And that's what we're hoping to do, is show you guys how those things work out. Then Diana asked, you suggest not leaving your crypto in an exchange, but where do you recommend they transfer it? So the typical flow is like you take your money from, whatever bank you're at, you take it and you transfer it into an exchange. That's how you exchange your funds for your US dollars for something like Bitcoin, USDC, Tether, Binance Coin, whatever you want, any of the coins that are in there. So then what you do is you exchange it, and then you can move it into a dedicated wallet, and you can get a wallet from anywhere. MetaMask, you can get them from, Gnosis Safe Wallet. You can get what Matthew, I think, has in his hand. He's going to show everybody. You can put it into a hardware wallet that you might have. Keeps it really secure. And
I guess I want to just caveat something when because there's a practical consideration once you hit a certain threshold. So we typically allow people to leave stuff in exchanges if it's like our internal threshold is about $10,000. That's likely not material to our clients. So when we talk about not leaving significant, I should have caveated and say we don't let people leave significant, whatever significant means to people, on exchanges. So this just has a USB connector, and it goes into your computer and allows you to this maintains your private key that we talked about when we say not your keys, not your coins. So this allows you to be the registrant of the on the blockchain of your cryptocurrency. And if you have a client and this is kind of how we determine if if people are capable, or we think that they shouldn't be even dabbling in crypto. If they're not able to use this technology, they shouldn't have that much money in crypto, right? And I saw some questions on whether we encourage people to invest in crypto. I'll answer that by saying I have no holdings in cryptocurrency. I've been in cryptocurrency since 2017. So I do not hold crypto. I don't think of it as an investment yet, personally. But the top wealth managers in the US have identified it kind of as an alternative investment. And so when people ask me for how much crypto they should be willing or a client asks how much crypto they can invest of their wealth, the top wealth managers are saying no more than 1% of your net worth if you are a highly aggressive investor. So that talking point has really helped me in talking to clients, because it's a meaningful response to their answer. It's a thought out response. So but it's not, but I do tell them that I do not hold crypto personally. And that's a personal decision.
Cool. I'll answer 2 more questions and then we can jump on there, Matthew.
Cool.
Matt B asked, will a client receive a 1099 from crypto transactions like a typical stock trades? So that sort of depends if they're doing it through an exchange or through any of these other companies that are marked as brokers. They will get a 1099B. They're probably getting a lot of emails right now telling them they're going to get them in a month or so. Otherwise, they would have to connect their if it's personal transactions, they'd have to connect to some personal crypto tax calculator that would help them calculate what their use is. If it's a business, we'll get to that here in a second. There's some subledgers that we can push out. And then Matthew, I'll let you answer this one. Amy asks, how is owning USDC different than owning treasuries based on your slide?
Yeah, so the USDC adds an additional counterparty risk that Circle, which is the company behind USDC, is actually doing what they're saying. So but there is an additional layer of counterparty risk if you have anybody in between you and owning your treasury. So that's the main difference with USDC. You have to get over that counterparty risk, that report that we say is out there is valid, and people, we've had all the audit failures, and this is just agreed upon procedures, and that they're doing what they say. So cool. Are we going to go into the 2022 review now? And we'll get to some other questions. We'll have more time to answer questions. Hopefully we get to all the questions. We'll just, hopefully some of these things will be answered. So a couple of the things, especially for those of you that are dealing with the tax side of this, we just wanted to show you a comparison on the differences to expect this year versus last year, just based on the charts. So in 2021, you had bunches of ups and downs. The real big difference for 2022 there's 2 of them. 2022 is almost straight down. So what that means for many of your clients that may be different than last year is they may be facing capital loss limitations for the first time in about 3 or 4 years. So if they weren't in the market in 2018 in crypto, or they've never seen that in the stock market where they were facing capital loss limitations, they might be facing those. So to the extent that you have clients that are heavy crypto folks, I would recommend, and we're looking at this internally right now, we haven't gotten all of our notifications out, talking about capital loss limitations, so that there's not a surprise at the end of the year if people had huge losses and they're expecting it to offset their operating income, and they don't have enough capital losses because they didn't have the ups like they did in 2021 to offset the capital losses. So that's number one. Especially for the practitioners in the audience that are on the tax side. The second thing, very few people are thinking about, I've seen very little written about this. We're trying to get a blog out on this at the end of the month. But there are now 5 major bankruptcies. And so people haven't technically lost their money yet because their assets are just tied up and they can't access them. So as a practitioner, I believe that your clients are going to think that they're going to be able to take those losses But we have an unresolved issue coming up. They might get 13 cents on the dollar. They might get 25 cents on the dollar. They might get zero, right? So understanding that in your background in other areas, when you've seen that before, you're going to have to be prepared based on whatever your risk tolerance is as a tax preparer to be able to talk to your clients about that and prepare them for that. So if you're aware of anybody had anything on these platforms, just be prepared. This issue is going to come up. It's probably going to come up in like August because all these people are going to extend and not even get their stuff to you till real late. So you have some time to get something out there and put your thoughts together on this. And hopefully we have more information by the time they file so you can make a real educated decision. But one of the things that's right. So you're going to have to figure out, like Richard's really risk averse. So if it's just a bankruptcy unresolved 2022, hey man, you're just going to have to deal with it. So I know practitioners have been in different places on this, but you're going to have to figure out what your stance is on bankruptcies and brush up on what it should be. I'm not sure that it's as gray as people think. So, but I'm not here to tell you how to do your job. I'm here to tell you this issue's coming. If you have people heavily invested in any of these 5 companies, and these 5 companies covered a large number of people. All right, let's talk about more fun stuff instead of just the gloom and doom. So this is where I hand it over to Anthony because he's going to walk us through NFTs and DeFi, which are 2 big things that came up. And let's start with NFTs, man. Talk about some of the fun stuff that happened in 2022 around NFTs.
No, will do. This is my favorite topic of all time. I talk about it too much at Thanksgiving and around the holidays at Christmas time, and I get in trouble by my wife with a gentle kick to the shin under the table. So I'm a huge supporter of NFTs. I think it's one of the super cool technologies that is going to come out of the blockchain, not just the cryptocurrencies we're speaking and store value and trading it and whatnot. So I'll kind of walk you through a few of the things that they have. So an NFT is a non-fungible token. We don't know who came up with the fungible side of that thing, but what it basically means is it is connected and directly tied to the blockchain. So it's not something that can be, that can be fungible, but it's in there. You can't change what it is. You can't come up with the difference. Think about collector's cards and how those are kind of taken care of there and how they're established through different grading policies. You don't have any of those issues with this because NFTs are, again, built into the blockchain. They're built out. They can be anything from JPEGs to audio files, visual files. We have some cool clients. Catalog Records is one of those where they're creating sort of a Spotify type experience where you can own the song and you can play it and have the rights to that song as well. One of the cool things and one of the really interesting things, it gets a lot of hate around because it was kind of the big industry, and there's currently some weird lawsuits and funny things going on in the news about them, but it's the Bored Apes. So if anybody's heard of the Bored Ape Yacht Club, it's a set of 10,000. That's kind of the general rules. You create a collection of 10,000 of these unique Bored Apes as they come out. And so it started out as just something, a few guys put together and built out these different NFTs that you can purchase and resell. And after a while, it started to get really popular. So a lot of NBA players, a lot of celebrities, a lot of people started buying these. So the clout and the hype of them started to increase to a point where they kind of changed up how it was built. And so if you own one of these NFTs, for example, the one on your screen here, of this Bored Ape with the cowboy hat and the bone necklace. If you own one of these NFTs, you can actually go in and license it and use the license and use the likeness of that to produce whatever you want to. In this case, we've got, it's Happy Dad Seltzer, which is a popular seltzer brand owned by the Nelk Boys. They went in and bought an NFT so they could put this and create a banana beer. This is very interesting, or banana seltzer. So it's really interesting, like the use case of it. Budweiser also created something similar down here with their the Bud Light NFTs. And it's not just a piece of digital art that you own. It also can be tied to some incentives. So Bud Light had some where you can, when you purchase one of these, it gives you the ability to purchase merch later down the road. So maybe some of these specific, maybe they create some t-shirts or some hats or some jerseys, something that's built around these NFTs that you own that are kind of in there. Also
Yeah,
creates
well,
exclusivity.
yeah,
and
Anthony,
other
we had a
things.
question about that. Is how can you own a digital asset? What keeps people from screenshotting it? And I think you did a good point of highlighting. We're also seeing with the Bud Light Next, that was a good example that we kind of played with. But also one of the conferences Anthony and I are going to, if you own an NFT, you don't have to pay the conference registration. So you're trying to decide if you're ever. So in perpetuity, you have access to that on that. So that's some interesting stuff going on. So I didn't mean to interrupt, Anthony. Go ahead.
No, that's great. I appreciate it. That takes me to another really good point. A lot of people, that's where I point to is membership into things is where NFTs are going to start to become greater and greater. I'm a big basketball fan. I'm a big Dallas Mavericks fan. Luka, just putting the plug in there. Luka is tearing it up on the court right now, which is just awesome to see. But you think about that, like we still have, and there's a lot of controversy going around different ticketing companies right now and how they're distributing tickets. You think about that, that's all digital. Like I don't walk in with a pair of tickets anymore. I just download the app on my phone and scan the QR code when I walk in through the gates. So what can be really interesting about that is like there's the ability to, and there are companies like Token Proof is a company that's created some technology around that, where you can purchase an NFT or you purchase those tickets and they say, hey, we're going to give it to you as an NFT. When you get there, there's an app, you download it and do it. That 20 years, if you tell somebody that 20 years ago, they're going to laugh you out of the room. And say, that's crazy. I'm never going to go in and use my phone and a code and to pay for tickets or to get my tickets. So those are some of the things. And then you get that NFT when you leave that scene. And maybe it's something crazy. I'm hoping the next basketball game I go to, if that happened, that would be really cool. But then like if Luka did something magical, then one of those NFTs could maybe trade for more or something in there. So you could, then there's the resellability of that, the resale market of it. The other thing is like season tickets. I see the future season tickets moving into being an NFT. So you could buy your season tickets, you have it. If you go to resell it, you could resell it on your own without having to go through an intermediary, without having to go through it. That's a lot of the benefit of using the blockchain and having things built out there is like when you're putting less faith in people. So right now, if you want to resell your tickets, you're putting faith in people that are reselling those and more putting faith into code. So that's kind of the difference around some of these things.
Yeah, just want to point out two more examples some of our clients had that we're seeing people progress into. One of the clients we had is a promoter for helping song artists. So they made the songs into NFTs with the hope of being able to help them monetize that over time. So where songs can almost be copyrighted. And that use case is trying to work out. This is very new, everybody. And then one of our not-for-profits actually did a NFT as a receipt. So they 3D print homes. So they were taking an image of the 3D home you had bought, and that was the NFT you got. So it's almost more like a receipt than an investment. So these are, the punchline is these get really complicated. They're hard to value. The tax position is crazy. We have one question whether it's supposed to be under the collector's item for tax purposes. All these questions are questions that are being sorted out on a case-by-case basis, and they're very illiquid and hard to value. So, but we wanted to let you know they're out there and some of the fun use cases that are out there. And then we're gonna, we want to make sure we hit DeFi too. So, how about DeFi, man?
Yeah, sure. So this is another one of my favorite things to kind of talk about. As you can see, like I'm just a big crypto accountant nerd, so it's a double whammy there. So one of the DeFi stands for decentralized finance. So what that means, again, kind of to piggyback off my last comment, you're putting more trust in the code that is written to do these things rather than people. So we'll start out with the first one, interest earned. So right now, you take your money, you go put it into a bank, and you say, hey, I want a certificate of deposit on that money so I can get interest back. Very little interest, a little bit more now that our loaned interest rates are so much higher. The bank goes, sure, we'll lock it up for a year, and then you can get your money back. The bank takes that, does what they do with it. So you're putting your trust in both the bank, insurance companies, the FDIC. You have that, that trust that's built in there. That's where you're trusting them. If the bank defaults, the insurance will pay for it, FDIC will pay for it, et cetera. With the blockchain and with staking and rewards of what you could do and interest earning, is you can take your money and put them into different tools that'll allow you to get earned income that'll come back off of it, interest income that'll come back. And what's really cool about these is it allows you to put it in, it's staked in there immediately, and it comes back out whenever you want it to. So there's kind of a systematic, it's systemization of earning interest off of your funds. And I generally tell people, if it's over 5 or 6%, you're getting a lot. If you're getting a lot more than that, more than 10%, take a deep hard look into how the business operates and what they do. So we saw with Genesis and Gemini earned customers were using Genesis. Genesis was kind of fumbled around with the funds, it looks like, a little bit. And so that's why a lot of those people don't have access to those funds, because it was being pushed around. Whereas there are other, again, it's just a code. It's just code that is written that allows you to get that. The other really cool thing about DeFi that I like, and I've gotten into more and more, understanding how it works and what works with it, is the ability to automate the payment and the release of funds. So if funds are coming through, and me and Matthew have a business plan together, and Randy, we'll maybe cut Randy in for like 5%. Whenever somebody pays us and we want to pay Randy as 5%, right now it's like we decide, okay, Matthew, you take all the money in, and then once a month you decide to divvy the money out. I'm going to get 45%, and Randy's going to get 5%. So it's not automatic. It's the money goes to Matthew. He takes that money, he splits it up, and then he sends it out. He's going to mail a check to Randy because we know he's old school, and he's going to PayPal me the funds maybe. But what's cool is now what you can do is create automations that are built on the blockchain to say, hey, whenever money is set into this wallet, this smart contract that we have, 5% is automatically going to go to Randy. I'm going to get 45%. Matthew's going to get 50%. So there are automations that are really built into fundamentally, and it's all code. So we're not relying on a person to make sure that's happening. It's all happening inside of a smart contract or different wallets that are set up to do these things. So there's just a scalability of the future of finance and banking. I think that is, we're going to really see the internet and how we transact on a daily basis really going to change in the next 5 to 10 years.
Anthony gets all the 201 topics. So we just wanted to make sure that you knew those trends. Those are topics people have been talking about for a long time. So wanted to make sure you guys had some exposure to some of that. And somebody's asking what blockchain is. Blockchain is just the technology most of the cryptocurrencies are built on. Just think of it as a database, but with buzzwords. That's the easiest way to think about it. There's lots of complexity behind it, but if you start with it as a database, it'll start making sense as you learn more about it. We wanted to get in on the regulatory front, and it's a really clean regulatory environment in the United States in particular. And I say that in just because 5 different agencies in the US or organizations are kind of claiming purview over cryptocurrencies. And if you've learned anything in this, it's likely because, as you've seen, cryptocurrencies can be many things. And one cryptocurrency like Bitcoin could be more like gold, USDC could be more like a currency, and NFTs could be more like properties or other things, right? But the SEC is treating it like a security. The IRS has been very clear that it is property. The CFCT is called it a commodity. FinCEN, which scares the crap out of everybody, if the money transmitter rules say it's a currency, and if your clients are issuing them, this is where you should focus most of their legal research. And the AI CPA called them intangible assets until October, and now has gone wishy-washy and is talking about fair value accounting. And we'll get into that in our accounting updates. We wanted to dig on 2 of these areas because most of you are interested in either the tax or the accounting implications of what's going on. So the IRS, if for those practitioners, you notice box 0 show up several years ago. They have been frustrated with practitioners because they haven't been checking that enough. So now they have changed the definition and box 0 to this exact language, which is at any time during 2022, did you receive, sell, otherwise have, touch, dispose, whatever, of any financial interest or digital asset? Because some practitioners, this used to, I think, say cryptocurrency, but they have said now NFTs, virtual currencies, stable coins, like these things that represent the dollar, are all digital assets. They're trying to take all of that out. They're trying to get more and more people to check this box 0. You still have to report. Everybody that's been doing this on the tax side understands they've seen the 8949s. If you haven't had to deal with this and your clients are new, you're going to be filling out their cap gains and loss on form 8949. The tax treatment is primarily as you would treat property. So you've got to think of this as property and property rules. FIFO is what most accountants who are wanting to stay really clear of the law are using. Although I have seen practitioners do LIFO, specific identification, and lots of things. With the guidance that is out there, I think the safest thing to say is you start treating these things as FIFO and property and trying to stay there. But there's lots of interpretations and lots of people doing lots of things. And we got some great questions online, and we don't really have all the answers for them. Like when people are staking, is that like interest income? When people are when they have NFTs, is that treated like a collectible? These are all questions that we're dealing with real time. So the way we're dealing with it in our practice is we're reporting. We're trying to document why we're doing things while we're doing that, in the hopes of being out there and out front of that. But you guys all have to do whatever your risk management practices are. You'll have to follow those in your firms. So we understand that's not for the faint of heart. We just got a question about, are digital assets considered foreign assets and reportable under FACTA? I'm not sure if this is the same thing. Is that the same thing? Randy, do you know FACTA? Is that the same thing you do for foreign? If this is the same thing you do when you have signing authority on foreign bank accounts, in 2017 and 2018, I actually had access to one of our clients' private wallets that had cryptocurrency, and we were because we didn't know what to do. I did file that had signature authority as if it was a foreign bank account. I apologize, I'm not a tax CPA. I'm a auditor. I told you guys at the beginning in my background, but recovering auditor, 9 years. Like what we did, and Deloitte was our advisor at the time, out of abundance of caution, we filed the forms that like as if we were signing on a foreign bank account. Subsequent to that, around 2020, their decision on that changed. So we stopped following those. I think there was some clarity around that, but I apologize, I'm not sure with all the FACTA rules, but I didn't want to ignore your question. It's a rabbit hole, everybody. So again, not for the faint of heart. We're just trying to get you guys some information so you can really process this and the risk questions that are coming up. So I appreciate the questions. Okay, yeah, the fact is the thing that I was thinking about. Thanks. I only see a D Sussman, so thank D Sussman. That was the 8938. That was the form I filled out in 2017, 2018. So some people are still filling those out for crypto. So it's just going to be where your risk tolerance is. Wanted to move on to the AI CPA because this is a substantial change this is a substantial change in what the accounting guidance was. Initially, I mean, AICPA never came out with anything authoritative, unfortunately. They came up with a practice aid that said that cryptocurrency was an intangible asset, and you had to use OTTI, other than temporary impairment rules, if you wanted to write it down, and you couldn't write it back up, just like any other intangible asset. That's been the rule since that practice aid came out. So I think we've had that practice aid about 2.5 years. And in October of this year, there was a movement, and it looks like there's edits going on to that practice aid, again, not authoritative, that's going to allow for the fair value accounting for cryptocurrency. So if you are subject to audits for your clients, or you're a practitioner, if you're a practitioner that has to do audits, God bless you. If you are trying to deal with auditors, you're kind of at the whim of their interpretation right now. If you're at a company and you have auditors, you're going to need to talk to them and look at this practice aid and see what they need you to do. There's not very good transition guidance, in my opinion. I'm really a little bit disappointed with the AICPA on this, but you need to start talking to your auditors because this is likely to affect the 2022 audit because the practice aid came out in October, and it's with the downturn. As an ex-auditor, I would say fair value reporting is going to be a better balance sheet when you it's just going to reflect a better balance sheet, more accurate balance sheet to the reader. So I can't imagine anybody who won't adopt this if they can with their auditors. So I'd be pushing for that, especially with the downturn. It's just most of the balance sheets are really out of whack. Before we're going to have some Q&A. Hopefully we can answer them as they gone along. Thanks for the FBAR clarification and the FACTA stuff. Appreciate the comments, and you guys crowdsourcing that in the chat for the tax people out there. I'm going to get to the fourth polling question right now. Just wanted to get a sense if any of you had heard of any tools. I forgot to put none on here, so if it's none, just hit other. But wanted to hear which, if any of these tools you had heard of. These tend to be business tools and not individual reporting tools, so apologize. I'm not as familiar with the individual reporting tools other than Legible, which has some individual capabilities. So that would be great. Oh, Kelly, we're going to talk about the apps on the next slide. And if you're doing tax or accounting, which one we think is the one to look at better. So hopefully we'll knock that out for you right now, and you'll hang on through the poll question. We'll get to that.
Yep. One quick question, Matthew, that I had, or Anthony.
Sure.
And I've heard people doing this before, but you can actually set up like validators where you are validating transactions for different cryptocurrencies. Is that something tax-wise that has any thing with it that you are aware of?
Yeah, we hear those people called miners a lot of times, or validators. So typically what we're seeing, the tax people that we've talked to, the initial cryptocurrency they receive is getting taxed at operating at the value, then at an operating income level. And then any change subsequently is cap gain, cap loss.
Really?
So you have a lot of complexity there if people are holding. One thing we do with those clients, Randy, is we talk to them and we make sure that you're separating those decisions. Like being a validator is one thing, being a speculator is another. So that has changed. Some of our clients now are just validators and liquidate straight to fiat or USDC as soon as they receive their rewards or payments.
Okay, so they're not leaving it invested. And
well, some people are, but
Yep.
we're just, if they do, we just want them to know they're running two businesses. They're running a validation business and a speculation business. So that's
Okay.
important to talk to your clients about, just like identifying risks you have with any clients.
All right, and I'm going to close this poll in like 2 seconds. I just saw one more. I'm amazed that when I say I'm going to close it, that more people are still putting their responses in now, but we're at 96%, so I'm going to close this, and 83% other was the most popular response here.
Yeah, that is a good statement on the tech landscape, you guys, actually. But we've been in this space since 2017. And done that. We got Bitwave on here for you. But we've been in this space since 2017 and look at a variety of tools. So these are the ones that have passed kind of initial muster in our minds. TaxBit is kind of raised the most money of all of them. It is the largest one. This is primarily an accounting use for a large client. So those of you in industry, if you have a meaningful organization and you can handle a $20,000 a year software license, TaxBit is likely the one that you're going to be looking at.
They also
Legible.
just purchased. They just purchased Tactic. They just purchased Tactic for the low end, for
Oh,
the
great.
$6,000 a year market.
So Anthony's doing our updates live real time. Legible is built in to Thomson routers now. Thomson routers made an investment in Legible. So for those of you on the tax side of the house, and we got a question about this on how are these guys helping, or what technologies are helping produce the 8949. Legible was the first one to get kind of past all the clearances and the SSA 17 reporting and all that kind of stuff. They also have a CCH integration, so they got about 2/3 of you guys covered. I think they have PTO built now for the Intuit users out there. So the practitioner-based tax reporting tool, their tax returns cost about $50. You can actually buy it through your Thomson Routers rep. So that one is the one I'm most familiar with. That's the one that I've been working with from 2017. They also have an accounting product, but they have been heavily focused on the tax product. We have about 6 or 10 of our clients on the tax return side. The compatible, all of these will give you the cap gain and loss for the question that came through. I know Legible integrates directly with TR and CCH products. I'm not sure if they, but all of these will give you an 8949. The question probably you have is whether it integrates directly. TR and CCH integrate directly into Legible. So if you're a bigger side firm and you have one of those products, it likely works for you. Luca is the next one. Luca is if you support any kind of, if you're more of a private equity type industry, any kind of people that are heavily involved in the financial trading side of it, that's one of them. Cryptio, for those of you that have accounting practices or CAS groups, Cryptio tends to be the one that looks most like bank feeds. So your staff interact with it like bank feeds, where they're tagging each transaction. It's kind of an easier lift it's an easier lift for training staff, and it's a cost-effective way if you're in the mid or small market way to do bookkeeping on the cryptocurrency. That's most similar to how people do it for cash transactions. And Bitwave is one we're watching because it was the only one of these groups that was at both QuickBooks Connect and XeroCon, which are the two major down market accounting conferences that our firm supports. So we're really working on doing the demos with Bitwave on their stuff. We don't have anybody up, I don't think, on Bitwave. The ones we're also tracking are Integral. We're also tracking what somebody cleared the question, but Gilded was up there.
Gilded, yeah.
Gilded kind of went, when we were looking at Gilded, it kind of went more the way of kind of managing payments. We need something more working on that. Bitwave.
Gilded is a really good tool. I haven't seen it much on the subledger side of things, but it's if you're paying a lot of vendors in crypto, it helps you manage kind of making sure you're paying the right people at the right times, and kind of payroll side of things type setup. So that's kind of where Gilded kind of landed. So we kind of, on some bigger clients, we'll tag team it.
I'm gonna jump in real quick in case anybody has to leave at the top of the hour. You know, we have done all our polling questions. We have you most likely, if you got here at the beginning, been on for your 50 minutes. So if you do, we'll get your certificate out to you. But that being said, I'm more than happy to stick on if you guys want to, and see if there's any more questions.
Yeah, and if we didn't answer something, I'm the Tech CPA on Twitter, LinkedIn, all the socials, the Tech CPA. Or our company's one is acuityco.co. We were too cheap to buy the M at the end, so we don't have the .com, so don't make that mistake, or you get to an insurance company. Anthony, where can everybody find you again?
They can find me on LinkedIn, LinkedIn /AJ the Accountant, I think.
AJ the Accountant. Awesome.
And then a couple last things. If we will be running this on our YouTube channel, it'll probably be up there tonight. So the Tri-Merit YouTube channel, if you want to look at this again and see anything you missed, or if you want to refer other people to this presentation, it's not available, at least at this time. Talks are in the works, but at this time for CPE on the YouTube channel, but maybe in the future it will be. And then
we got to get you on Earmark, dude. Randy.
well, we
gotta
are
get
on Earmark for the podcast. We were
Oh, this
talking.
isn't the podcast. Okay,
That's right. We are talking about putting the videos on Earmark. So you spoiled the surprise. I'm talking with Blake and David about that. So we will
Great.
see if that happens. And then Anthony had a great idea that maybe we could put out some kind of post with all the Q&A, because there was a lot of great questions and great answers as well during the presentation today.
Well, I just want to know if, Randy, you feel like you have a little bit better sense for that. Hopefully each of you guys also do have just a little bit better understanding of crypto, enough to be dangerous and make good choices. And hopefully you have another resource now in the two of us to reach out if you need anything. And Randy's always a good resource for everything.
I'm a good resource to get them to the right people like you two. So I can definitely direct them that way. All right. I think we do have people dropping off now. So, and I think we pretty much answered all the questions. So I just want to thank Anthony and Matthew again for being part of this today. This is a webinar that I've had in my mind for over a year now, and I'm glad that you two agreed to do it. And it really was. I learned today, so I feel that it was very successful. So thank you for both of you for being here.
Thanks, Randy.
Awesome.
Always a pleasure.
Thanks everybody for joining and being great with the Q&A and getting in there.
Yeah, that helped a ton. Thanks, guys.
Yep. Thanks. All right. Bye all.